You make $250,000 a year. You drive a European luxury car. You live in a prestigious zip code. Your friends think you are rich. Your parents are proud. But if you miss 2 paychecks, your entire life collapses. On paper, you're wealthy. In reality, you are technically insolvent. Your net worth is practically zero. You did exactly what the system told you to do. You went to school, got the high-status job, and bought the lifestyle. And that is exactly why you are trapped. In the next few minutes, we will decode the high-income poverty trap. First, you will discover the dangerous psychological difference between cash flow and actual wealth. Second, we will expose the 3 structural expenses that act as your golden handcuffs. Third, you will learn the exact artificial scarcity protocol the elite use to escape the inflation cycle. By the end of this video, you will stop valuing your money in dollars and start valuing it in units of freedom. Write this down now. A high salary is not wealth. It is just a faster way to dig a deeper hole. Let's break the illusion. The middle class confuses income with wealth. Income is the water flowing into the bucket. Wealth is the water that stays in the bucket to generate leverage. Most high earners have massive hoses pouring water in, but the bottom of their bucket is entirely missing. Take a doctor or a corporate lawyer. They spend a decade in extreme academic suffering. They finally graduate and land a massive salary, but they start their most productive years with $300,000 in student loan debt. They begin the race with a negative net worth. You are mathematically behind before you even start, but society expects them to look successful immediately, so they use their new, massive salary to mask their insolvency. A high income is dangerous if you lack financial literacy. It acts as an accelerator. It allows you to access massive lines of credit. It allows you to ruin yourself financially at a much higher speed than a minimum wage worker. Why does a highly intelligent professional make such terrible mathematical decisions? It is a psychological response to accumulated deprivation. After a decade of eating cheap food, skipping vacations, and sacrificing their youth, the first big paycheck feels like an absolute right. It is a psychological release valve. The spending becomes explosive. They buy luxury watches. They book the expensive resort. They justify it because they earned it. Furthermore, high-stress jobs breed exhaustion. When you work 80 hours a week, you have zero energy. So you buy comfort. You pay premium prices for food delivery, expensive services, and convenience. This is called stress spending. You bleed capital just to cope with the job that is paying you. You are buying anesthetics to survive your own success. And then comes the identity pressure. In high-status fields, there is an unspoken rule. You must signal your competence. If you are a high-paid consultant arriving in a rusty 10-year-old car, people question your success. You buy the expensive suit to fit the role. You become a prisoner of your own zip code. This leads to the lifestyle inflation cycle. Your spending tracks your income with terrifying, magnetic precision. Every time you get a raise, your expenses rise to meet it. But the real danger is not buying expensive coffees. The danger lies in structural fixed costs. There are 3 traps that lock the golden handcuffs onto your wrists. First, the massive mortgage. You upgrade from an apartment to a massive house in a premium neighborhood. That single decision raises your baseline forever. Higher property taxes, higher maintenance, higher utility bills. You cannot simply cut these costs when you get tired of working. Second, luxury transportation. You sign a lease for a $90,000 car. You are paying double or triple the cost of standard transport. You are tying up thousands of dollars a month into an asset guaranteed to depreciate. Third, private education. Sending children to elite private schools requires massive amounts of gross income. You are paying that tuition with after-tax dollars. It consumes a brutal percentage of your net pay. You are trading your freedom for monthly invoices. You are a Henry, high earner, not rich yet. To break this cycle, you must override your own psychology. You must implement strict, mechanical rules. Rule number 1, the fixed personal salary. For the first 5 years of your high-income career, you freeze your lifestyle. You live exactly like a college student. You use the massive gap between your new income and your old expenses to annihilate your debt. You build the wedge. Rule number 2, the 12-month cooling rule. When you get a promotion or a massive bonus, you change absolutely nothing about your fixed costs for 1 entire year. No new house, no new car lease. You bank the difference. You starve the ego to feed the asset column. Rule number 3. Measure in freedom units. Stop pricing luxury items in dollars. Calculate them in shifts. Calculate them in extra hours worked. Does that luxury car lease equal 3 extra weekend shifts every single month? Is that status symbol worth sacrificing your actual lifespan? Wealth is the time you buy back from a system. The ultimate goal is not a larger paycheck. The goal is the crossover point. The crossover point happens the exact second your passive investments generate enough cash to cover your fixed monthly expenses. The moment you hit that line, your job becomes optional. You are no longer a hostage to your employer. You operate from a position of absolute leverage. But to get there, you must engineer artificial scarcity. You cannot trust your willpower. You must set up automated systems that extract your investment capital the second your paycheck hits your bank account. The money disappears into index funds and tax-advantaged accounts before you can even see it. You force yourself to survive only on the planned excess. You must pay your freedom before you pay your ego. The system wants you to earn a lot so you can borrow a lot. They want you stressed, tired, and dependent on the next direct deposit. Your salary is not wealth. True wealth is the gap between your ego and your income. Once you stop trying to look rich, you finally have the capital to actually become rich. If you want to master wealth psychology and decode the traps keeping the middle class paralyzed, subscribe to see reality clearly. Study the structure, because money isn't just earned, it's engineered.